I don't believe that gender matters. I don't believe your background matters, race. I don't believe, whether you're a millionaire or you're a struggling mom of three. I don't think any of that matters when it comes to trading. What's really important is having the core foundation.
Welcome, everybody, to episode 3 of the T3 Alpha Show. I am here with Charlie Moon, who is an expert on AI and momentum trading. He is a trading coach with Prosper Trading, and he has a really interesting story that started in the poker rooms. So, Charlie, how are you doing today?
I'm doing great, Michael. Thank you for having me on.
Okay, so I was listening to this interview you did with Digital Social Hour, and you talked about how before you were trading, you were playing poker. How did you first get into poker?
So it's funny. It really started with just a few friends and I. We watched Rounders. We're like, why don't we give it a try? And then we started having these small poker nights. It was my first exposure to poker, and I actually did okay. It's always fun beating up your friends and taking their money. But then we realized that there was online poker, and so my buddy and I, pulled together a couple $100 each. The first night I tried online poker. It was a website called Paradise Poker. I entered a small tournament. It was maybe 60, 70 people. I ended up winning it. Within the next subsequent 2 weeks after that, I took down two more tournaments. I placed in a couple. And then I actually played a tournament that I thought was a low stakes tournament, but it turned out to be a satellite to a bigger stakes tournament. And then I ended up taking third place in that one. So that's pretty much how my bankroll got jump started. From there, um, it's really funny. It was my buddy's own apartment. He and I basically invested into a 4 monitor setup. I started toggling into a bunch of MTT tournaments and then started dabbling into cash. Now, my first exposure into cash games was online. Turns out that you could actually make pretty good money having multiple tables going at once. I was trying to average about $20 an hour per table. Over the next year, I built up a pretty healthy bankroll. And then Black Friday hit. Black Friday was basically when the whole internet poker industry got shut down in one fell swoop. I still have, I was luckily able to pull money out just prior to that. It wasn't my entire amount, it was only about maybe 40%. I have never been able to recover the rest. I just have, like names like UB and Full Tilt, Paradise Poker at the time, and several other websites still had my money. I guess they're all gone now at this point. I don't really care. So that kind of forced me to start looking for live games. I quickly discovered there was a casino right over the border in Illinois. At the time, casinos weren't allowed in Illinois. There was only one, like a riverboat casino, that they didn't have poker at that time. So I went to Indiana, found out there was a couple of cash poker rooms and some tournaments. Ended up starting off really, really well. And then you eventually meet a lot of people, and then a lot of these people are from Chicago or from Illinois. And then you discover a lot of house games, and it almost becomes like a roving circuit. And so you're going to some house games during the weekday. Sometimes certain nights at the casino is a lot better and just had a lot more players. The weekends were always really good. A lot of the times people like to drink a lot when they're playing poker. So strategically, I ended up trying to, instead of going a little bit earlier, I started going into the poker rooms Friday night at like 1, 2 in the morning. Um, it sounds kind of savage, but I was really trying to pick on people that were a little inebriated and just maybe on tilt because they were losing all day. And it became really easy to just, or it became a lot easier to be profitable during those hours than the hours when a lot of the grinders and a lot of the, I guess, pros at the time were really playing. And so I just felt that that was kind of, you know, um, my strategy in terms of approaching cash games at the time. and this is actually funny how that's how I got into trading. A gentleman named Amit is a really close friend of one of my close friends who hosted a poker game. Um, he and I would play at my buddy's house game pretty consistently, and probably after like the third week that we were playing together, him and I were pretty much the consistent winners of the game. He's like, "You're pretty good at poker." He's like, "You ever consider trading?" And I said to him, "I'm like, what's that?" And I really didn't know. The only exposure I ever had to like kind of stocks and stock picking was in high school. I don't remember what kind of class it was, but it just you would pull out the newspaper, you'd see the business section, and they'd tell you to pick a stock, and that's what I did. I just IBM was the stock that I picked, is the only name that I really recognized at the time. I ended up doing well for the class project, thankfully for IBM. But yeah, he's like, I work at a trading firm. We just cut a bunch of traders. We're actually doing a round of hiring. I think you'd be great. He's like, if you want to interview, let me know. And it really intrigued me because he kept talking about what kind of money people were making at his firm, how he was doing, and so I decided to give it a shot. Now, luckily for me, it wasn't the old school traders that funded the actual company. I believe the company was also backed by Wall Street, but it was the two sons who were initially clerks, and then they built up into being traders that ran this firm. Art and John, they were pretty young at the time, and they just so happened to be avid poker players. So Meath kind of let them know who I was, what my background was. Um, and they kind of just during the interview didn't really question me about stocks, but questioned me about a lot about poker. Like, how was I, um, how was I constantly profitable, and what would I do in certain game scenarios, and like, they really broke it down because there's a lot of parallels. People don't realize there's a lot of parallels with poker and stock trading. A lot of that isn't really necessarily applicable in relation to um, technical analysis versus what goes on the table, but it's always about reading the situation, assessing your risk, and then making a decisive decision if you want to take on the risk.
Yeah.
Money
Okay.
management, risk management, these are really key core, fundamentals for both being a successful poker player and a trader. So that's kind of where they were really kind of grilling me on, and that's really where I truly understood what it takes in terms of longevity in poker and how it could translate into trading.
Yeah. I mean, there's definitely obvious parallels in terms of, risk management, managing your own emotions. But I'm curious, what was your style of poker play, and is your trading style similar to that?
Yeah, it's a great question. Kids these days, they exercise what's called GTO, so game theory optimization. We're talking about math whizzes, like true to life math whizzes that understands percentage based opportunities based on how the hand is played, where you sit on the table in relation, and what betting was prior to, or what betting is as it starts. And I am not on that realm exclusively. Maybe if I still play poker professionally, that's something I would really delve deep into. For me, it was always about reading the situation. You know, Poker is a game where you don't have to have the best hand to win every single time. Applying pressure is always really important. So I was never a passive player. I like to be aggressive. Aggressors historically will be the ones to come out on top. Um, there's always going to be some semblance of luck, but there's no difference between buying a call and then getting news on that stock after you buy the call, and really putting the applying the pressure on the other player, and then just happen to just outflop them, or getting the cards you need um, at the very end. But aggression, timely aggression, is a good way of saying it. And more importantly, and this is where I just had this conversation with my trading room earlier, is that sometimes you're not going to win, and that there's nothing you can do in that scenario to win. So you're trying to just minimize your loss or minimize the damage as much as possible. It's the same applications to trading. We're not going to win on every single trade, but the more that you let that trade go against you, the more that it's going to actually hurt your bottom line, going forward. Because if you had the choice of losing either 200 or 500, we're always going to optimally choose that $200 loss. But it's the same thing. That additional $300 that we lost at one time, well, if we do it multiple times over in a week, in a month, in a year, it adds up very, very quickly. And that goes against your top line, which is obviously the profits. And so that's just something that I always try to preach both to my students. It's something that I've always lived by. There's going to be times where you're going to have a max drawdown. There's nothing you do about that. But the more times that you could prevent a loss, whether it's $20, $50, $100 more than you would, the more that's going to be ammo for you to utilize and really profit from later on down the road. So that was my big thing: mitigate losses. Just know when you're not going to win, and when you do have a chance, you have a choice. You could either lay over and try and get lucky, or you could force the scenario and ensure that you're going to win. So it's very similar to how I trade. I like to aggressively pursue opportunities early in the morning if I see the signs that I need to see. Since I'm a technical based trader, I'm always looking for breaks through certain levels, or price action at certain levels that tells me buyers or sellers are coming in, depending on which side that I'm playing on. And then you're left with one decision: you either take the trade or you don't. So it's something that I've always carried over in terms of attitude. I like winning. That comes from having a bit of a sports background as well. And, I like being in situations where I can win versus just kind of watching the paint dry, so to speak. So the approach is really similar, and it's really carried over since when I first traded till now.
Okay, I'm glad you brought up the topic of loss mitigation. Now, in my discussions with traders, it seems unanimous to them that people have to learn the hard way. That people have to touch the stove and burn their hand before
Right.
they actually get it. So, do you think traders have to feel some pain before they learn that lesson?
It's just human nature. You brought up the exact example that I give to my room. You take a 3-year old, and they don't know what fire is, right? They see it, but the moment that they put their hand over the fire and it hurts, that's something that's going to stay with them for the rest of their life. And that's something that, in terms of trading, sometimes you need to feel that hurt to actually learn. There's just so much that we could always tell people. There's so much that we could really kind of, explain from our experience and other traders' experiences. But I always feel that it's inevitable. Like, you get exposure into this type of environment, you're gonna deal with the big ebbs and flows, the big ups and the big downs. And ultimately, the traders that are successful are the traders that can find the balance, and more importantly, really kind of separate the emotional state, psychological state, and look at trading from a totally different perspective. And I think that's where a lot of new and even old traders struggle, is that they incorporate too much of the human element, from the back end, like the psychological and emotional state, versus the clarity of seeing and reacting. And this is something that I press to my traders, but it's very true. It's just that we just, as humans, sometimes we just have to learn the hard way to learn.
Okay, so when you made that transition from professional poker to professional trading, did you see the parallels right away?
So this is kind of where and why I'm in the position I am today. I'm not going to mention his last name, but my trainer's name was Jim. He was a hell of a trader. We were When we came out of training, we were all assigned to one of the top traders, and we were trying to shadow him, just basically sit next to them and ask him questions and learn. I would see Jim, swinging apple, and again, we were learning to be day traders. So it was a prop firm. We were hotkeying into trades, so we were just basically banging them with the keyboard all day long. And I would just like out of nowhere see him make $3,000-4,000 in seconds. And I would ask him, and he's like, "I'll tell you in a bit." And by the end of the day, he's up 10, 11,000 on a really good day. And I kept asking him, and he's just like, "Well, it's kind of difficult to explain." And again, it's no, I don't really put it to the fault of Jim. He was a real introvert. He's just not the type of guy to be able to quantify or explain. He just kind of knew what to do. But that was a big problem because he couldn't explain to me what he was doing. I would see him make all this money and I have no idea. And it was just kind of this like 3 week period where it just got to be really, really frustrating. Thankfully, Amit and his mentor at the time, who just happened to be like 2 years younger than both of us, really taught me a lot about understanding what price activity and action is. And then they're the ones that started actually introducing me to kind of candlestick behavior, charting behavior. When I was watching Jim, it was just looking at the trading dome or the level two and effectively just trading on orders that were coming in the books. One of the things that the firm had an advantage of is being piped right into the NASDAQ and the NYSE is that when we saw institutional orders, they were tagged. So if it was 1,000 shares of Apple and it said BS on the side, it was Bear Stearns, or it said LEH, it was Lehman Brothers. Just so you know, I started trading in July of 2007. So, I actually believe that firms started spoofing because of prop firms like us that were looking at those orders, front running those orders, and leaving those guys in the dust, and really just kind of taking advantage of the price movement, based on their orders that were coming in the books. So, this experience with Jim has forever changed the way that I want to approach our students, because I don't want any of our students to ever feel helpless like I did. So I always try to explain everything in full detail. Sometimes the explanation can go on for 5 minutes, but I always try to fully explain everything. Whether it makes sense to them or not, I don't know. But I always try to, break things down so that it'll make sense to them or it'll make sense to others that are listening. And it's because I don't ever want them to feel like how I did. It's pretty helpless. You see a guy make $10,000 and he doesn't want to tell you how to do it. It made no sense. And more than anything, he was incentivized. Like he was going to make 10% of my commission for the first year, in terms of profits. So it was in his best interest to help me, but he just really couldn't or didn't care.
Okay. Do you ever get the sense that people who are really skilled and talented just can't always explain what they do well?
100%, because there's certain things that I could see about the markets that I struggle trying to explain. Um, I try to do it, but it sounds crazy when I try to explain. So, for example, when we talk about price action at certain levels, if we could see how inflow, outflow, plus how the books look, and then it may stall out for a second, and usually depending on the timing of the stall, I'll be like, this is about to break down or this is about to reverse strong. And then I try to explain what I saw once it takes place, but people can't really pick up on it. So, part of it is obviously things that I've just picked up from years and years of looking at the same thing over and over again. And I understand kind of why things would be difficult to try to explain, because we've probably never had to explain it before. It's always been like a read and react and almost second nature for a lot of traders. So I don't blame some people. But yeah, I've definitely been in those scenarios where I've struggled to try and, quantify why, or the why, I guess, is the big part of this.
Yeah. Yeah. I almost think of, like anybody's grandma cooking. Like if you ask her how much salt to put in or whatever, they like, what do you mean measure? No, you
This
just
month.
know. Yeah. Yeah. Okay. All right. So moving on. So now you're known as the AI guy in trading. So so when did you get into AI and why?
It's something that we've looked into in particular. For me, I've also looked into it for a really long time, going on about 9 years now. We as Prosper always had a little bit of interest in it, but a lot of that interest was drawn out because of things that I wanted to do in terms of trying to automate from my perspective. And I've always looked because the most important thing is how do we make trading easier for others without getting them absolutely obliterated in the markets. So I've kind of looked into AI going on for a lot of years now. I had a friend who was the floor manager at Jump Trading. They looked into it, and I've had these conversations with others. Especially some friends of friends who are actual quants, and it's always been an intriguing subject. But in terms of my experience with any AI based platform that I came across, it just never worked out really well. It just never did what I was looking for. It never pinpointed to what I wanted. They were like there was a time where the cannabis sector was the hot sector. It was hotter than tech and anything else. And so we're trying to figure out, ways that we could capture, upside opportunities in this sector. And one of the guys was looking at like frozen concentrated orange juice futures and gold and looking at Pepsi performance. I'm like, you're taking in too much into what we're really looking into. And that's kind of where I've always have found it's traders that have been trying to talk to devs or engineers, and they're trying to like replicate what the traders are looking for, and there's always something lost in translation. And then I came across this platform because it was introduced to me, and they said, "You think this platform is pretty darn good? I want you to look into it and play around in it." First 2 hours that I had a hold of this platform, I was like, "This might be it." I created a couple scanners, but then more importantly, I was really just tracking the names that it was offering up, and it just made a lot of sense to me. And then I met the CEO slash dev slash owner of the company. His name is Ophir. This guy is really smart. He's an actual quant right now. But this is when we had it was about a 2.5 hour conversation. It wasn't there was a lot of questions going back and forth. He was trying to feel out who I was. I was trying to feel out what he knew, and it was just an incredible conversation between two traders. And it's something that perspective wise, we both look at things very similar. And I was just like, okay, I want to give it a shot. So I started utilizing it. Um, I think in the first 2 months that I had the tool, I basically doubled up. I started with 10, and I think I finished with like 23 by the end of the year. I started at the beginning. Well, I really started more towards like the mid beginning, maybe the second week of October of 2023. We unleashed the program in November, and we just crushed it. Following year, crushed it. This year, I actually got off to an incredibly hot start. I mean, from a number standpoint, from a performance standpoint, during the most volatile times and unpredictable times like we saw this year, um, I did really, really well. I was above, in terms of the short term history. My win loss ratio was higher, and my rate of return was higher. I've fallen into this little kind of pocket, maybe like a 3 week pocket. It's the biggest drawdown that I've had. But essentially, since that little moment, I think I've gone 6-1 with the signals that I've serviced from the AI system. And right now, I got about 4 trades working, and almost all of them are positive right now, if not close to hitting target. So, there's always going to be some sort of tweaks that needs to be done by Ophir. There's going to be some tweaks that I need to do in terms of adaptation to the market. One of the kind of sayings that I tell people to just always live by is adapt or die. The market is constantly evolving, especially now that we're in the technological phase of of trading. So the advancements, the evolution, the adjustments, the adaptations are accelerating. Things that would be 5, 10 year time frames are now like on a 3 to 6 month scale. So, this is something that really intrigued me, that I have found to be extremely beneficial. We're taking someone like myself who has, years upon experience and actually is improving my trading. That for me, there's no other bigger, proof that this is a system that could work for everybody, than just seeing your own statistics just get so much better, and actually making trading easier. That's probably the biggest thing.
Okay. Sorry. Can you share the name of your? I don't know if it's top secret, but can you share the name of the AI platform?
Yeah, it's called Trade Machine, trademachine.com.
Okay.
The
Okay.
beauty of this is that it's a web-based system versus having to download the actual program. So, you could get it from your cell phone, laptop, tablet, doesn't matter.
Okay. Now, are you doing the same things you used to do before, just faster, or is it allowing you to do brand new things you've never done before?
Actually, the best part of this is that it's taking the back end time, the research time, the study time, the analysis time, and kind of tossing that out the window, because it's presenting the names that it feels will be good in this environment. And all I have to do is cross reference it with charts, which is my forte, is technical analysis, projection. And, it really, if it lines up, it's just, you look at the back end statistics. How has it performed over the last 3 years? What has it done in the last year? How many signals out of all the results were in the more recent time frame? And then, the overall, I guess, investment time per trade has shrunk down immensely. And so, essentially, what it's allowed me to do is kind of get my life back a little bit. I've always been a hard worker. I've always dedicated a ton of time, not only just to the markets, but to my client base, because they obviously take this leap of faith. I want to make sure that, number one, they get their ROI, and number two, that they leave as better traders, or if they ever leave, as better traders than when they first crossed paths with me. So that's a lot of effort, dedication, and time. And as I'm getting up there in age, I turned 47 today. I
Happy birthday.
Thank you. I realized that there's got to be some sort of separation from family and work. Especially with, like, this has been a crazy year. I've had three different friends, all my age group or maybe even younger, that got diagnosed with cancer. And my father-in-law got diagnosed with cancer. One of my close mentors got diagnosed with cancer. So it put a really different perspective of life for me. And I've kind of embraced the idea of getting a little bit more time for myself and my family, and a little less time towards work. And that's actually where AI has come and played such a significant role lately.
Wow. Sorry to hear you went through all that. Now, I do think this topic of life work balance is interesting, because it does feel like a lot of people are flat out addicted to the markets and watching charts and prices. And I'm actually thinking of one person. I won't say who it is, and it's nobody currently affiliated with T3, but I can think of one person that was basically focused on the market so they could ignore their entire family life. So, I mean, like, do you think it's essential for longevity to just have a little space?
Yeah, the balance is pretty key. Like I said, I've been numb to it. Working 6, 7 days a week. Because there are things that I definitely can benefit from. I work from home. I used to go to the office at the Chicago Board of Trade, but now I live in Colorado. Trading has allowed me to move and work wherever I like. And essentially, it's something that you're going to realize that when we're a lot younger, we're able to kind of avoid the burnout. But once you get the feel of the burnout, or if you actually are dealing with it, this is where everything's not just doesn't become cumbersome. it just gets to a point where it's going to affect every single portion of your life. And so I strongly encourage people to not overdo it. People that love that sign up to my program love to just pour in all this time over all the materials, but we're talking about hundreds of videos and thousands of pages of content that they're going to have to go through. And even if they're able to get through it all very quickly, at what point is there going to be the retention factor where they're going to be able to remember everything that they've learned, or there's going to be some sort of bleeding across, and like there's going to be some confusion, and it leads to sloppy execution, or it leads to execution where they shouldn't be involved, or maybe they're even trading on the wrong side of the market. And this is where it kind of it's that one step forward, three steps back theory. We don't want people to kind of start off bad and have that negative connotation and just that psychological effect. Start slow, build up, and then that really, there's always going to be this point where things start to click, and that's where the acceleration in terms of your learning curve really comes into the picture. But if we try to force that issue, we're always going to actually widen that learning curve, and it's going to, take a lot longer to really grasp and absorb all the information that we need.
Okay, so as you look back at all the people you've mentored, like the people that succeed, what do they have in common?
There's several things. One, they're pretty disciplined. When we talk about timely aggression, that's going to be important. They're aggressive when they need to be, but they're hands off when they need to be as well. Aggression is important. You know, there's ways of obviously slowly growing your account. We call it grinding, right? It's the same thing at the poker table, just grind it. What's your hourly rate? But there's always going to be a point where you're going to have to take on that risk to make your day, make your week, make your month. And that's part of it as well. So I would say being very disciplined, being patient when the time comes to be very aggressive, and to not be afraid of taking on some risk. Now, I'm not talking about risk where you're, risking your entire account into one trade in short dated options. That's not going to be the case. But the most successful trader that I've ever taught, a young gentleman named Richard, he found my program because he initially took 30,000, ran it up to 100,000, and then ended up coming all the way back down to 37,000. So he's like, listen, I'm missing something. I know I can do it, but he was smart enough to know he needed help. Um, the first trade he took with me was in a stock named GNUS. This was when GNUS went from OTC and got uplisted to the Nasdaq. It was actually crashing in pre-market trading, and I think well, this is what he told me. He nibbled, I believe, at around 40 and built out a position before the market opened. And by the time he was about 30 minutes in, he had all $37,000 of his account into this trade. He said he was going to be smart with it. He knew what levels I was looking at because he was asking me questions. GNUS over the next week and a half proceeded to jump almost to $14. He cashed out at $12. Um, he's like, "That's fun. Let's do it again." I can't remember the trade. It was another small penny stock. I want to say ICT, but I know that's wrong. But regardless, it was around that time. It was around 100. It was around $1.10. It was another trade that I really liked. I was assessing it right against this like 98-cent price. Same thing. He took his $37,000 account plus his profits, bought into that one. That one ran up to $12, $11. He cashed out right there. So his first two trades, he fully levered. And from there, this is where he started to actually peel back a little bit, because he knew this is what got him into trouble last time, is that he was over leveraging position. I actually told him that I was happy for him, but I'm like, this is not going to be sustainable. It's like going all in on every hand in blackjack. You may win a few, but it's just going to take that one loss to just wipe you out. And so he understood that. And then from there, he slowly started growing. And within 8 months, he truly discovered technical analysis, trade management, timely aggression. He turned that 37,000 in 2 years, was trading $5 million worth of SPY contracts. And right now he has, and he's doing great. He's ventured off. He's doing a little bit of AI automated trading in forex. He's still swinging 100 lots in SPY and Qs. Um, he said he graduated to SPX contracts, but I know he kind of reverts back. I think he likes the liquidity a little bit more in SPY, and he's still crushing it. He's making 1 to 2 million easily a year. He only trades part time, and he probably only trades maybe 1 to 3 times a week at most now. So he's really found his routine, discovered what he needed to do. Quite honestly, he kicks my tail with trading, and I absolutely love it. But he needed to learn the core because he always knew he always had that aggression in him, but he needed to kind of learn the core foundation. And once he discovered it, he just took it and ran with it.
Okay. So I want to wind back to poker a little bit because there's another parallel I want to discuss. So you talked about the concept of having a certain like amount of money you want to make per hour, whether it's 20, 40, 50, 100, whatever. So a while ago, we polled traders asking what their goal was. Now, this wasn't multiple choice, but the biggest answer across the board was I want to make $10,000 a month. And my theory was that's enough money to give your boss the middle finger and make a living. Do you think it's actually reasonable in trading to have a dollar based goal?
So I think that, okay, my honest opinion, I think that if you go into trading every day with a dollar goal in mind, it's actually more of a detriment than a positive. I think that if you're going to look at goals, weekly goals is okay, monthly goals is really important. Assess how you did for that month. I know that people will have trackers on what they do on a daily basis. That's fine. But I always tell people, again, if you can win every single day, you're in the 1% of the 1%. Um, you should look at this effectively as how did you perform for the week? Especially if you're not a day trader, you're a swing trader. It's really hard to assess how you're going to do well on a day by day basis if you're holding open positions with unrealized profits. And again, they're unrealized because you haven't taken them off the table. So, it depends on where you're at, right? As a day trader, perhaps having a daily goal will help you get off the keyboard and walk away with the money. Um, that's where a lot of traders sometimes struggles that they overstay their welcome. But as a swing trader, I think you got to give yourself a little bit more grace. Look at it from a weekly, more of a monthly perspective. Making $10,000 a month, is really, I feel, not that difficult in the market environment, depending on what your starting capital is. If you're trying to turn $1,000 account and make $10,000 a month, you got a long road ahead of you. You got to build up to be able to, one, take on the risk to be able to make that kind of capital, and two, be able to withstand any drawdowns. Because as a trader, and again, if you've been in this market environment long enough, there's always going to be some sort of drawdown. We just got to make sure that drawdown is something that won't knock you on your tail forever, that you can dust yourself off and get up and get back at it. And so, this is really important. For me, with small accounts, my whole thing here is let's take positive steps. Prove to yourself that you could get the right trajectory first, and then we'll start to expand from that point on. But do I think do I think that it's something that can't be achieved? No, I think that it could actually be easily achieved. I don't believe in this is my perspective with trading. I don't believe that gender matters. I don't believe your background matters, race. I don't believe, whether you're a millionaire or you're a struggling mom of three. I don't think any of that matters when it comes to trading. I feel that what's really important is having the core foundation. In my room, in my program, I would say out of the top 5 traders, 4 of them are women. Why? It's because they're really aggressive when they need to be. They're extremely patient when they need to be. They've gone through a lot of difficult things in their life. So, whenever they have a bad trade, well, they don't take it to heart. They understand it's part of the game. And more importantly, and it just sounds funny to say this, but those the women traders that are really successful in my program, they just seem to be really, really smart, and they just know. They just happen to retain information a lot better. Males tend to have a little bit too much of an alpha ego, um, because it's just kind of the environment we grow up in, and that's something that a lot of people will struggle with. So, I just feel that if you have the proper combination, doesn't matter who you are, doesn't matter what your age is, you could absolutely crush it.
Okay, so well, let's dissect the flip side of this, because like sometimes we hear from people at T3 saying, I've been trading for 20 years and it still hasn't been working for me. And my first thought is usually like, why not just like buy a boat or something? If because you know it's not like playing guitar or something where if it doesn't work out, you mostly waste the time. You probably spend some money, but like, is there a point where people should just realize trading is not for me?
I will definitely say that I've come across the paths of some people that is correct. That trading is not for them. And a lot of the times, it's actually because they started with a lot of money and lost it all, and they just can't shake that. There's always going to be a point though where if they could effectively get past that hurdle, um, they can recover, right? It's the same thing, right? You talk about alcoholics. Once you become an alcoholic, does that mean that you're going to be an alcoholic for life? No, you could break that cycle. It's the same thing with gambling. If you could break that cycle, you could stay away from being a addicted gambler. But it's the same thing. If you can't break that cycle, if you can't get past that hurdle, then I agree. Trading is not going to be meant for you. Um, there's I've had some really great stories where people have turned things around, and I have unfortunately worked with some great people that just can't get past that hurdle. So it's really onto that individual. It's really difficult. That's bad habits, psychological scars. These are really difficult things to get over. You almost kind of have to study, the thesis of like human psychosis to really understand what they're going through. And no matter what you could tell an individual until they could get past that point for themselves, if they just remain in that tightly wounded like hamster wheel, and they're just running in the same place and not really making any real, progress, especially with what's been holding them back, then yeah, I feel that trading may not be forever.
Yeah, I mean, losing lots of like I and just to be clear, like I would never be a professional trader just because I know I don't have the, you know, emotional makeup for it. And I've taken like some big loss, I wouldn't say some decent losses speculating on options. And yeah, I would imagine if somebody like has their life planned out based on some amount of money they have and then they lose it all, that's trauma.
Oh, yeah, and we're usually the trauma is something, and they're horror stories. Someone that um, decided to gamble with their retirement account at 60 years old, and lose it all, and it's like things like that. I totally get. It's one thing being a 30-year-old and losing your retirement account. It's another thing, when you're a 60-year-old, you're only a couple of years away, and then next thing you turn $500,000 into $5,000. It's a hopeless feeling, and you know there are things like that I could totally understand why people can't get over. It's also something that people need to understand. when you're operating in the markets and more importantly operating with certain instruments, there's a significant difference between trading options and trading equities. With certain stocks, I'm not going to say all stocks, but certain stocks, if you give it enough time, you'll have a real chance at recovery. But this is the difference between losing and holding on names like Apple, Amazon, Google, Meta, Nvidia versus holding and losing on names like I don't know, APVO, AYT, AYTU, CEE, CHEK, like these notorious pump and dump names, APDN, for example. And you ever get to that point where you're holding at the top, you know, respectfully, I kind of tell people and give them the cold truth because I don't want to give them any illusion. It's better that they understand what the situation that they're in, and they have to kind of figure it out what their planning is going to be. And obviously, if they ask for any help, I'll kind of explain what they can do and what certain scenarios can be outlined. But it happens to anybody. I actually know a hedge fund manager right now that's sitting on a pretty significant bag in DJT. And, this is a really smart guy. He only takes on, investments of $5 million or more. And, he just, his affinity for Donald Trump and his thought process in relation to what DJT is, he's just now holding it at an extremely high price and just now wondering if he ever has any shot at recovery. I'm sure he's DCA'd a bit, dollar cost average, but even then, there's just so much he can do because he took such an aggressive stance early on with a lot of money. And, and you can see that it even happens to those that are experienced and those that are supposedly the best of the best. It just happens. It's just human nature. Just nothing you can do about it.
Yeah, it's so interesting, like how our lizard brains are not built for this, because I would imagine that for this person, the worst case scenario is just taking the loss and it goes up. So yeah, I don't know. I really admire how people can keep themselves together, you know, like through all these ups and downs. So I want to sort of just brainstorm something with you for a second. Like, do you think it would be a good exercise for a trader to go to like a casino with $500 and just try to make it last as long as possible?
Yeah, that again, that's I've never thought of a scenario on that, but yes, that actually makes a ton of sense. Two things. One, um, especially if they're not familiar with the casino or they're not into the casino, it's probably going to be a lot easier for people to try and avoid certain things. But let's say someone that likes to partake in the casino, just like they like to partake in the stock market. Um, we always say, "Oh man, I lost a couple of grand at the casino," and so nonchalant. But even if they could afford that, it's just like, well, why did you take that hit? I just had a bad run of cards. Again, there's always going to be some parallel. Well, if you think that it's not running well for you, why did you sit at the table? Well, because I was hoping that I'd start, getting hot again. It's the thing that we say with trading, hopium, right? Hope and pray is not a solution to trade management. Um, that's just something that just doesn't work. It's just something that's just never going to be applicable when it comes to trading. So why is it applicable to you going to the casino? Don't use the casino as an excuse. You know, quite frankly, casinos could be another revenue of or another avenue for revenue if you play it appropriately. Um, there'll be times that I like to play high stakes, but generally speaking, if I'm going to the casino, I know when to cut loose. I know when it's not my day, and more importantly, I know where certain situations are just not being favorable. Why? Why am I going to stay at that slot machine or stay at that craps table or stay in that blackjack seat? Get up and move. See if you could turn your luck around. And yes, it's the luck of the draw, but The more that you expose yourself to a bad draw, a bad table, a bad seat, the more likely you're going to lose. So change the narrative in that sense.
Okay, so back in your poker playing days, and this applies to any casino games. Like, are you strictly thinking of it in terms of money in, money out? Because a lot of people are at the casino because they want that thrill. Like,
Mm-hmm.
like we see the people that are 90 years old with the oxygen tank,
Yeah.
like pulling the lever. And I know psychologically, even pulling the lever it is part of the whole game there. But when you were playing poker, like, were you purely transactional, thinking of it like dollars in, dollars out?
Yeah, it was a job for me. There will be certain social settings where I'll play with friends, even if we played large stakes. Some of my games with some of my closest friends, we would sometimes get to a 5-10 game, which meant like we're putting thousands of dollars on the table. But it wasn't a big deal for us because one, we were a large collective that we're always rooting each other on. Money wasn't like, if we lost a couple of grand, it wasn't going to hurt us. Obviously, if we lost tens of thousands of dollars, it might be painful. But, this was something that, we would understand going into the social setting that it's more of a good time. When I'm at the casino, especially when I was playing poker, I certainly would have friends. I know I would know certain people from other games, or my friends would be there. And ideally, it wasn't like it was collusion. I would just try to avoid hands with them. But sometimes it's inevitable we would play. And the unwritten rule in those situations is that um, if we're in a hand, we play it. It's poker. There's nothing we're gonna do. If we really want to kind of back off, we're going to let the table know and we'll say to each other, check it down or whatever, or, we'll just keep betting blight. But we don't want people also to think there is kind of there's some sort of collusion going on because that means one, nobody's going to want to play with you. And two, if the casino thought there was collusion, then obviously you would get kicked out. And so that'd be the worst thing, right? That's like someone taking your job right out from underneath you. So for me, poker was always some measurement of work. I didn't want to go to the casino to lose money. I want my motivation to go to the casino was to make money, and that's what I was there to do. And that was my primary focus: give myself the best opportunity to be successful. If it doesn't work out, let's call it a day. I no need to stick around and try and dump $4,000. Dig the hole bigger, bigger, bigger. Just trying to make back $500. It doesn't make sense to me. So sometimes you just have to know when to cut your losses and call it a day. And sometimes when the going is good, you just got to ride it out as long as you possibly can. Um, I was never there to enjoy myself. I mean, I would, sometimes it'd be an 8-10 hour session. You have to figure out what to do at that point to keep yourself entertained and keep yourself focused. But, I was there for one reason, and that was to take the other person's money.
Okay, so everybody's watching. I'm about to really grill Charlie on something very, very controversial. But if you've been enjoying the conversation, please like, comment, and subscribe. So, Charlie, I do have a bit of a bone to pick with you, perhaps. Do you think Rounders is actually a good movie, or is it just you like poker, so you like the movie?
Um, like, I've never been in a scenario where it's embellished,
Mhm.
but there's a lot of things that were pretty legit, like them rotating through multiple games. Yes, 100%. Were there any poker players that I ever knew that could read the room like Mikey could? Absolutely not. Reading is a lost art. There's something to it. There are nuances that you could always pick up. You've read the old school poker books, they talk about it. But truth of the matter is, it's really the assessment of the hand at the time versus the playable odds that you have that could potentially give you the opportunity to win. And then kind of reading and reacting, it's the same thing. Anytime you go into a room, you're reading the room. There's some semblance of that in the variation of poker. Were there times where I would call someone down and have like one of those magical hands where I would win with like a queen high. Yeah, but out of the hundreds of thousands of hands I've seen, I maybe have done it twice, where I've called someone with like a really, really top, like really, really weak hand, and just totally guessing what they have. Um, a lot of those times in those scenarios, you'll never see the other person's card because if you read the scenario right, the bet that you make will win the hand and they'll put their cards down and they have no idea. They're just going to assume that you had a strong hand. And those are the scenarios that I would say really configure to how the situation played out, what the betting action is, and how you could either take that aggressive step forward or know that you probably are going to be beat in that situation. It's similar to like reading price action in trades and then jumping on it or saying, maybe not there just yet. So, I don't think Rounders is a true representation of what poker really is. There's some parts that hit it dead on, and then there's some parts that are extremely embellished for Hollywood's sake.
Yeah, I still can't get over Teddy KGB's accent. It's just
He's the best character.
yeah, I don't know, like, because I've met, I've lived in Brooklyn my whole life. I've met so many Russians that it's just like, oh my god, it's just it's hilarious. Okay, one final question, and you don't have to reveal what it was, but did you have a tell yourself? And again, you don't have to say what it was, but when you were playing, like, did you have a tell that could give things away to other people?
Yeah, I guess there's always going to be some sort of tell that every individual has. The one thing that I always tried to make sure that it was really consistent and straightforward was my betting patterns. Um, so you would never be able to tell what my hand was based on my betting because it was pretty even, pretty straightforward. And usually it's very aggressive because if I have the chance to lead or if you check to me, chips are going in. That's the whole thing. Get the chips in, apply the pressure. And and that's always going to be the scenario. Even if I have a tell, if you put the pressure on the other individual, and they're just not built for pressure, they're going to fold every single time. They're going to fold in their feelings, the attitude, and of course physically the cards. And so that was always my approach, is not so much max pressure, but to make sure that the pressure and the decisions were on the other individual as much as possibly can. I'm sure I had tells. I'm sure like I would scratch my face or my breathing pattern would pick up when I have like a really good hand or when I'm trying to bluff. But I'm never sitting there thinking about that. Even if I'm not looking at the individual, I'm always trying to pick something up from that individual that whether he ends up calling or ends up folding, that could potentially help me going forward. So I was never really worried about my tells. I was always trying to pick up on everybody else's.
Yeah, yeah. I was always wondering that in trying to cover up one's own tell, you give something away that you're not aware of. Okay, everybody, thank you for watching. There is a link down in the description below to Charlie's programs if you want to learn more about them. Charlie, thank you for joining us. We really appreciate it.
Yeah, this was awesome. Thank you so much, man.